Sorry for the intermittent connection and the disconnection just now. Can you see that this is a very strong trend line that has been tested, and also the resistance not as strong, but then again, can you see for the third time now we experience an exponential move upwards, and guess what? There's a strong tendency again for it to snap back down, and to which exponential average we do not know. I was waiting to ride the trend up all the way as high as possible, and bearing in mind that this is Friday, so far what I've been anticipating has been correct. So I was hoping for a higher high, a higher high that the uptrend it can go further more than this. And therefore, once again, I did not I did not take my profit over here. I let it come down. And furthermore, having established that this is a strong trend line, I want to see I'm confident that it should break this trend line. And if not, I'm going to cut my loss if it sorry. I mean it is going to respect this trend line, and I'm going to cut my loss if it break this trend line. So that was my trading plan at that point in time. And then as I watched, it bounced off the 100 MA once and twice over here. So now this tells me that this zone over here is acting as a strong support for the uptrend. And then as it goes up one more time over here. So where did I cut my loss? At this point in time, I was getting ready. So okay, so we have to rewind a little bit. And when I see this strong move upwards, what I did was at that point in time, how I analyzed the trade was to use the Fibonacci retracement. So initially, at this wave here, I drew a wave down, and this is what I saw. During the uptrend, I saw that it broke through the 100% Fibonacci retracement level, and therefore I wait for it to go up all the way. And when I saw this strong move over here, what I did next, I turned this Fibonacci retracement into a Fibonacci extension. So how to use Fibonacci extension? We have to connect from sorry the low of a wave to the high of the wave, and then back down to the low of the wave. So once this correction was completed, this is what I have on the chart. I know it looks kind of messy, and so just have to bear with it for a moment. And this is what I see on the chart at that point in time. I see that the 61.8 corresponding with the upper boundary of the VWAP. And at this point, when it is going to continue its uptrend, I was waiting, and I see that it broke through the 38.2 Fibonacci extension level. So this could act as a resistance, but it did not. So prices broke through and then come back down to find a support over here. And then the next level of resistance is this upper boundary of the trend line that we have drawn previously. This upper boundary of the trend line, the channel that we have identified. And coincidentally, it coincides with the 50% Fibonacci extension level. So this tells me that this is going to be a very strong resistance. And given that I see that it bounced off, bounced down, and then bounced up, get resisted, bounce back down, bounce back out, resisted again, and then it come back down to test the 32.8 FIB-E level. And once it broke through, and that's it, I decided to just cut and take my profit, whatever profit that I have over here at this point in time, and do not wait for it anymore. So that's what happened on Friday itself with my day trade using the 327, using the 293 dollar call that I purchased. And with that, that is what contributed the greatest to my gains in my portfolio. Therefore, this is the uptrend that you see. Not uptrend, the gains that you see on Friday itself. And on Friday itself, you can see that it was my best return so far year to date, having again 11.9%. And for my portfolio, this is how I've been performing. My portfolio has been performing. It has been up almost 23%. And then you can see that the journey so far for me has not been smooth sailing all the way. Since the start of the year, I was on par with the S&P 500, and at this January moment, towards the end of January, you can see that my portfolio dipped instead. So if you recall, I'm going to show you later, this is a period whereby the S&P 500 experienced a very slight correction, and I was late for it. So therefore, it resulted in my portfolio being so deep into the negative, while the S&P only experienced a small correction. And this time round, being more experienced, and also based a little bit on luck, as because of the AMD trade, the AMD protective trade that I've mentioned earlier on, I managed to stay ahead of the water this time round. So let's now go back to the daily chart, and then let's just clear away all these messy daily trend lines now. So as I was let's change this to just just a candle for simplicity's sake. Now, as you can see, I've mentioned previously, this is the slight correction in January. So back then, what I did is I was late. I saw the dip down here, and I entered my protective puts at this point in time. So I was late, and then subsequently the S&P 500 did not correct as much. It bounced up, rallied up, and then down a little bit to test at the 50 SMA before rallying back up again. So therefore, being late to the protection, my portfolio suffered during this downtrend. And then when I bought puts during this period, the put lost as well. And as the S&P 500 rallied afterwards, my put was at a loss. So double loss, which resulted in my portfolio being down more than the broad market index, as you can see the green line over here. So with that, enough about me and my actions last week. So what is going to happen as we move into the first week of March? Now, can you see that this is a very large downward move? So, and then we see a huge green candle on the last trading day of the week, which is last Friday. And moving on from here, as I've said, it could really go either way, either gap up, either the market could go back up on Monday or could continue the downwards correction on Monday. And how can we better anticipate and place ourselves in the right position? So one way again is to use the Fibonacci extension tool. Now you can see that this is the low of the up wave to the top of the up wave, and then we want to go to the bottom of the down wave. Sorry, my bad. Extension is not the right one. We should be using the retracement. Now, retracement, because we are treating this as a downtrend right now, and we want to see how much it can retrace in this in the sense of a downtrend. A retracement is a rally up. Yeah, so therefore we want to use a retracement tool and see again where are the Fibonacci retracement levels. So I can see one at 23.6, and indeed it closed, the high was at the 23.6 before it go back down a little. So if you can break through this 23.6 level, the next area of rally, the next area of resistance for the rally could be at the 302 level, as well as the uptrending trend line and the 200 SMA. So again, this is going to be a strong level of resistance. If it break through, it will be met by the 38.2 level, and followed by the 150 SMA, and then the 50% level. Now, personally, if it does continue rallying on Monday, at least it should, in my own perspective and opinion, I think that it should at least rally up to the 150 SMA. So this area and this area are key areas where I'm going to keep a close watch on. If they hit here and there's any sign of a downward move, I'm going to continue employing my protective puts on my portfolio again. Now, if it goes down, how much more down can it go? So as we have pointed out previously, 287.1, this is the 100-week SMA. This is rather strong as we have seen already. Next level is 280 and then followed by 268, which has been tested, acted as a support and resistance back into the start of 2018. Resistance and then resistance, support, support, and support, support over here. So this is what we can get out of from the daily chart. Now let's move one step higher and look at the weekly chart. Things do not look so ugly on the weekly chart, and we see that here, see towards the end of 2018, we have a mini bear market whereby the market corrected 20% from top to bottom. And when it corrected this, and when it has this 20% fall, it bounced off the 200-week moving average. So what does this tell us? If we break through all these levels of support over here, the next strongest support that we have on the weekly chart is around this level at the 200 weekly MA, which is around 263. But of course, first it must get through the 280, which will then be the 150-week moving average support, and then also 268, and finally followed by 263. So if it continue correcting next week, these will be the key levels where you want to keep an eye out on and buy and protect your portfolio with protective puts, or if you are not so familiar with options, another way to protect your portfolio would be to long. There's two ways to it. Either you short the SPY, or you long the inverse, that is to buy the inverse of the SPY ETF, and that is the SH. So if you are not so familiar with shorting and you want to go long, you are more comfortable with going long, then you can buy this SH, which is the inverse ETF, inverse S&P 500 ETF. And you can see it acts inversely to the S&P 500. Whenever the S&P 500 goes up, the SH goes down. And you can see that during this correction, it goes up very sharply. So these are two ways in which you can protect your portfolio during next week correction, if there's any, or also in subsequent future corrections. So let us move on to trading and investment insights, moving on into March, into the month of March. Now, as we have experienced this huge correction of about 11%, you can bet that a lot of the stocks right now are undervalued, especially those in fundamentally strong stocks, as I went through over in my value investing strategy. And these are stocks like your Facebook, your Intel, and RCL. So Amazon also. These are all very undervalued stocks. So I do not have the time to analyze the intrinsic value. So if you're interested, you can go and calculate and analyze the stocks again yourself. But generally, this is my portfolio for my long-term investment. And can you see, interestingly, despite the 11% correction, all my fundamentally strong stocks, value stocks, are still not in the red yet. So P&L open, my profit and loss since I opened up the position, since I first bought them, they are all still in the green despite this 11% drop. And they are all within the range of like 3 to 20% for my portfolio. But generally, you see that my portfolio is still down, negative 1%, because I did not do any active trades for the long-term portfolio. I only applied my protective trades in my trading portfolio. And for long term, I decided I decided to just use the simple DCA approach and as well as the value investing strategy. So, and so what is giving me my losses are mainly all the ETFs right now, the emerging, the global ETF, the emerging markets, the China and the China ETF, FXI, EWHGXC. So you can see that these are the one that's giving me forming the majority of my losses in my investing portfolio. And so if we just take a quick glance through all the potential targets for value investing, you can see that they are all at very great discount and also key technical supports. Amazon, we have a key support over at 1,800, and you can see this green candle over here. It dipped through, and then now it is back up again. So this could be a strong support, and it has also been tested previously a few times before. And if you don't know yet, Amazon just recently beat earnings, which resulted in the stock price gapping up from 1,800 to almost 2,050, and then continue rallying up to like close to 2,002 before it declined during this sharp correction. But if you think about it, has the fundamentals of Amazon changed? It is still the same strong company, right? It is still performing as well. So this huge 15% correction has nothing to do this huge 11% correction in the S&P 500 has nothing to do with Amazon being a lousier company. So therefore, this huge correction over here, I'll term it as an irrational move by Mr. Market. For those of you who have read The Intelligent Investor, there's this term called this interesting analogy called the Mr. Market. Yeah, so right now prices are irrational, and that's when we value investors are going to receive a good opportunity to accumulate our value stocks at a great discount. So when all this is over, when the broad market is going back up into its uptrend, you can bet that strong stocks like this, Amazon, Facebook, Apple, just that Apple is still overvalued right now, these strong stocks are going to rally up even higher, and that is when us as value investor would make our gains. So instead of panicking and selling, you should be watching out for these key levels and doing your purchases. So get ready a shopping bag and get ready to shop for your investment. Yeah, so Facebook, you see it broke down through the 200 SMA, and you see that things for Facebook, the face chart of Facebook doesn't look as nice as Amazon. So yeah, and you can see that I have done a brief analysis using the Fibonacci retracement from the bottom of the wave to the top of the wave. You see these are the corresponding levels, and right now we see that 61.8 could be acting as a resistance. So depending on you, you may want to accumulate now since Facebook is undervalued, or you could wait for it to hit the next key level, which is at the 100 mark, this $171.45 right here. It looks like trade based by fractals. So personally, I did not go much into fractal trading, so I can't really comment much on fractals. Yeah, I apologize for that. Okay, so Facebook and then Google. Google is still quite expensive personally. Yeah, but as once again you see that these are the key levels for Google, and yeah, it dipped on the 1,200 level, and then now it is at the $1,300 level. Okay, so with that, do you guys have any questions? And RCL, you can see the huge plunge down because this correction is due to the coronavirus, and recreational stocks like RCL is going to take a huge hit. So therefore, if you want to invest in RCL, it could have been better if you can wait for it to rise back out to the 86 level. or wait for it to drop back down to the 65 level, which has been tested, shown to be a very strong level of support, tested multiple times over here. Yes, so that's generally for today. If you guys do not have any more questions, then I wish you all the best for the upcoming weeks and for your trading and investment in March. So let's hope that the market will be kinder to us in the near future and continue its uptrend, and where things will be easier for all of us, be it as traders and investors. So thank you so much for tuning in with me today. And with that, I hope that you could successfully grow your wealth in the market. Stay tuned to my upcoming video content where I'll be covering chart patterns that you can use for your trading to enhance your trading. So thank you and see you next time.